Hey guys, this is Patrick White here with your weekly recap video. We've seen a lot of action here in the corn, soybean, and wheat markets here, along with the livestock as well. So I decided to do a video here just to kind of recap what we've been seeing and what we could see going forward here. Today we had December corn down 7.5 at 402.5. November beans were down 16.25, and they closed at 865.25. And September wheat was down 11.5 cents today at 475.75. I'm going to put up the disclaimer here. Obviously, futures trading is risky, especially if you've been following these markets the last couple of days. You definitely know that. So yeah, just a reminder that there's no direct trade recommendations, and everything that I say here is just my opinion. So getting on into it here, yeah, we've basically seen total carnage here in the markets. You know, taking a look at Dees corn here, this is the December 2019 corn chart. You know, we've had a nice rally, and we've really just liquidated these last couple of weeks and most of these last couple of days. So ever since we broke essentially this 420 level, which is the area I'm on right now with my cursor, ever since we broke that level, you know, we've just really seen, further selling. We've seen the algos kick in, and we've gone all the way in 2 days here from 420 down to, the low today was 397. So I guess I've got my next area of support in here at the 393 to 395 area. And that just corresponds, a little bit over here with these highs and stuff that we saw in April. I thought that this 405 mark, which is the area we broke out from, would be good support, but, we've taken that out too. So, why is the market really sold off here when a lot of people, think that the USDA is off on their acres and their yield estimates, things like that? Really, you could argue ever since we did see that report of, the higher acreage number that, we really haven't seen a lot of threatening weather. We haven't really done a whole lot of damage to the corn market since June, and that's, when we saw the high. So, markets rally on expectation. They say the bull has to be fed every day. We basically, this whole run up, we saw reports of, late planting, and the damage was being done, wetter forecast. Well, now, we've got a cooler and a drier forecast, and, there's what is planted got planted. And so, as far as further damage, there just really, isn't any. And besides that, on the supply side, we've got the demand side too that hasn't been doing so hot either. We've got negative ethanol margins. I've been hearing rumors of a couple plants shutting down. We've had lower export sales than anticipated, just, due to the rally partially, and part of it's due to the dollar. So really, there's not a whole lot of fundamental rationale to rally this thing. And we're not going to see a report that will rally this thing until August 12th, if that happens, and that's a big if. So a lot of people, they want to hang their hat on the supply shock and stuff that we had, this spring. And sure, could the USDA reduce acres? Sure. Could the USDA reduce yield? Yeah, they could. But as for right now, until we get into that August 12th report, we're probably going to see some liquidation. And I think the most optimal scenario right now is just a sideways chop. So I think we're going to probably see some liquidation into this 393 to 395 level in December corn. And if we can get a chop going, I think that's where you're going to find your support. As far as hedgers go, you guys need to be hedged. Put options, put spreads, stuff like that. You might as well not give back, any more than what you already have here. And I think that just, with not a whole lot of bullish information out there right now, besides what the USDA could bring us on August 12th, this thing's going to continue to sell off, and there's really not a whole lot of fundamental rationale, for higher prices there. So, and that's kind of along the lines with the wheat market here. We saw this big run up going along with corn. We never really had that big of a weather scare for the U.S. wheat crop, really. And in world crops, the European crop and the Russian crop has been cut here recently, but obviously the market, hasn't been responding to that. So we've also, we've got the dollar taking out new highs and things like that, and just our exports really are not competitive with the rest of the world. So right now, wheat is probing lower here. I expect us to go down to this 470 level in September. Wheat, we lost the 485, kind of quasi double bottom there that we saw a little bit. We lost that 485 level, and we just continued to sell on here. So I think that, we'll probably see 470, and we could see as low as 455, and they're just going to trade lower until they see better export demand from the U.S. or we see further cuts from Russia and Europe. Really, there's still a big pile of wheat out there in the world, and that isn't really going to change here in the near term. So, going on into the soybean market here again, along with corn, we've seen just exuberant amount of selling. We did kind of have a wedge formation in here. We just kind of did our sideways chop, but as soon as we lost, essentially, call it the $9 to $8.90 level. We just, really sold off hard here these last couple of days. And just, with that as well, we never saw China purchases for soybeans in these last round of trade talks. And, you could argue that they broke down. The trade talks kind of broke down here. So, and today, we lost another 13 cents in about 25 minutes when the president announced that he was going to add another 10% onto the tariffs on $300 billion worth of goods. And I believe it's the last amount of goods that he could have tariffed. So I'm pretty sure that we've tariffed basically everything that we import from China. So, so with that being said, they didn't buy anything for the trade talks. Not that they've really needed to, because the African swine fever is just taking a lot of their livestock herd out over there for hogs. So they really haven't had a whole lot of fundamental rationale to buy U.S. soybeans, just because they don't have the hogs to eat it. So with that being said, we broke the 870 level. I've got 865 pegged as the next area of support in the newsletter, at least. And then after that, I think we could see this 845, and if that breaks, we could go on down to 825 or so. So definitely, still is not too late to get put options on soybeans. And just from a demand side of things, really not anything bullish you can hang your hat on there. But and with that being said, too, the supply side of things, it's a lot less of a weather market than the corn market is. So something to consider. Also, if you take a look at a meal chart. Meal has been leading soybeans down lower. I'll back that out a little bit for you. But essentially, we chopped around this 309 level and we lost that. And, they went down through the 301 level today. So they're looking at the 295 level to see if they can hold that. And if you look at the soybean chart on here is right about, in this general area, be about the 309 mark. So soybean meal has already broken that support that the soybeans have. So, will meal continue to lead soybeans down lower? Honestly, I think so. Just the meal market has been struggling with demand. They struggled with the tariff announcement today. And it's really tough for the meal market, for soybeans to rally when the meal market's just leading it lower like this. So you're not going to see a huge rally in soybeans when meal is acting the way it is. So over here on livestock, I guess the most bullish ag chart that I can find really is cattle here. I'm looking at the October live cattle contract. Really, we've just been ranging between the 110 and 107 to 108 level. So I expect this range to continue here. If we do break below it, I would expect us to go down and possibly test out these old lows down at 104. If we do break above it, I would expect another further run up to this 112.5 level, and that's where you can see the other bottoms there in November and December of this year. So, honestly, I think cattle is a sideways trading range type of market here. Not a whole lot of news as of late to break them out of this range. And but today it was nice seeing a positive day, especially since hogs were down. And usually hogs they'll have some spillover selling, stuff like that. Speaking of hogs, it's been pretty rough for the hog market here lately. We did make this big, nice run up here, up into 81.5, and that corresponds with this level of support here, and we tested that in May. So they went up, tested the old May floor, if you call it, 81.50, and then we just done nothing but sell off since then. The sell-off has been driven by the lack of Chinese purchases, and the market, obviously, during this run-up, they expected the Chinese to step up and buy a significant amount of pork. We did not see that. So, we went down and we broke the gap level of 75.5, and we've just done nothing but basically limit lower or almost limit lower every day. Today was an extended limit move down $3.52 here in the October contract. And, you know what? They closed right at the lows that we've seen, in July. So I think that if we do break lower here, we'll probably head to 66. Who knows? I mean, this market's in free fall. So, the market could go down lower below 66. I guess you could maybe tout like the 62 level, but we'll see. But right now, it doesn't look like there's a turnaround in hogs at this point. And with that being said, too, it doesn't look like there's a turnaround in corn or soybeans either. Nothing too bullish in the price action that you can hang your hat on. I'll keep you posted, though. Just moral of the story here: manage risk. Get put options on. Don't let them take away more than they've already taken from you. Even if it's just a cheap put spread or if you don't want to stick your neck out there and pay that much for all the premium and the options there. I mean, you can do a put spread for relatively cheap, and you don't want to give away from a producer standpoint. You don't want to give away more than what you already have. So, with that being said, if you got any questions, feel free to call our office at 712-262-7606 or go ahead and visit me at aa-commodities.com. So, hope you guys get a lot done today and have a great day. Thank you.